Good evening. Today is February 9th, 2026. And today we had a day with basically upward bias. Uh, and the sell off at the end of the day created a tail on the daily chart. So here's how that looks. This is today's candlestick. You know, crazy bullish day on Friday, obviously. And then um, today, some follow through buying, but couldn't create a bull bar. So this still just looks like range, like price action. Uh, let's take a look. So something you need to keep in mind when you come in at the beginning of the day is uh, how much how large the daily candle is so far. So if you look at the daily chart for the past, let's just look at the past like 2 weeks or so, maybe a little more than 2 weeks. I would say the average bar is about, I would say this size. So if I hover over this high and low, that's about 115 points. So when you come in and I drew this line in the overnight, the price action that is 33 points, but I actually am seeing that I did that incorrectly. So it's about that 44.75 points. When you come in and you see that, you know that we're probably going to break out. And so we did run into resistance down here. So I'm not, I think that's kind of where prices were responding to is this high. But even if it's 45 points, you know that prices are due to break out. And so I had this level of resistance drawn, and what I saw there was this pullback to about 50% of the price action. People bought there. And the reason they bought there is because if you buy here and you put your stop below the low of the day, let's just call that 69.40. If you put that below your stop, you're risking 19 points. And if you're betting on a breakout and measured move, your reward is 44 points. So a risk of 19 and a reward of 44 is a very, very good risk reward ratio. So that's something you always need to keep in mind. And if you hit your loss here and you think it's going to break out to the low side, then you can sell. And that's what I believe happened here. Um, if we play around with this, there's a chance that we hit a measured move to the high side here. Looks like we came up short. So that could be a target for tomorrow. That's something to keep in mind. Um, but anyway, doesn't really matter. Let's take a look at this price action. So I am looking at the 2700 tick chart, and so in the overnight you come in at 5 o'clock. Looks like prices are correcting to about 66% of this downward move before selling off. So would I be getting long in here? I don't think so, just because you're in the middle of this move. So I think you should just be sitting out. And then we come down here. I don't know if that my screen just went black or not, but then we come down here and we make this sort of double bottom. So I think it's reasonable to get long here, especially because this looks like you have a break of this channel and a move to a new low. it's reasonable. Probably better to wait on a higher low. And you could argue this one is a higher low because clearly we stalled here and then we get a strong bull bar. And same thing happens here. So you might look at this as a parabolic buy climax, but you get a nice strong higher low that engulfs this entire pullback here. Um, so I think it's reasonable to consider getting long there. So let's mark these up. Reasonable here. I think it's reasonable here too. And I think it's reasonable here. Um, we go sideways here. I don't think you want to short this, but you don't want to get long because it's not very strong anymore. You're going sideways. Pulls back, and then you get a bounce. And if you were looking at this, how I was marking it up before, where you had a range drawn around these highs, and I actually had the lows right there. And you saw that 50% move that I was looking at. I mean, the computers, clearly a lot of computers were looking at that because that's where they started buying. So if you see all that, that's a very good risk reward profile, and I think you can buy there. Uh, Honestly, I wouldn't question anybody going short right there. That looks to me like a parabolic buy climax. You have 1 weak push up, a second stronger push up, and then a very strong third push up. It looks like a wedge top. So I definitely don't blame anybody for taking that move back to the EMA. It didn't even make it back to the EMA, so that's why it's good to scalp partial profits. But you know it's near resistance. I don't blame anybody for taking that. Only thing you got to keep in mind is um, when prices came back up here and it looked like they were trying to go lower, they didn't test this level of support. So, that's a sign that we're going higher, or a sign that we're potentially going higher. Then we get another strong push up. The breakout fails, comes back, tests the EMA, and it just keeps going after that. And you could bet on the measured move if that's what you're seeing at this point. And I mean, at this point, here you have a potential trend line. This one's a little harder to spot because you might have the lows drawn something like this, and that actually looks a little more accurate to me. Yeah, that's a little more accurate. At least I think so. And this break doesn't look very convincing. And we ride that trend line up. This is a more convincing break, but by then, this is a break. So you have this and you have this. So I think you want to stay out of the longs at that point. And you get this very strong 2 bar bear sell off. And what I think that is the way I had it drawn earlier. It looked like computers or whoever were anticipating this was breaking back into a range. So if we draw this measured move, you can see that it just looks like a lower high back into the range, and then whoop, psych, they just reversed it. Um, and you test the high before selling off, and that's pretty much it. So that's how I saw it today. Hope everyone had a good day. I'll be back tomorrow.